Hi, Colorado Springs. This is Jenny, and I'm with my co host today, Leah. And we are going to go over a deal analysis that Leah recently closed. How are you doing, Leah?
I'm doing good. How are you, Jenny?
I'm doing good. Trying to figure out how to get the podcast stream working on my own. So I think we're doing live now. So
Yeah, we are live.
Yep. So tell me a little bit about the client, and we'll just kind of go through the spreadsheet.
Sure. So this client is a first-time investor, brand new. So you and I did a little bit of coaching with him before, just going over some analysis on a few properties. And then we actually landed the first property that we went out and looked at. So pretty cool.
You have a really good track record of getting your clients under contract on their first property. So that's really impressive in this market. So
Thank you. Thanks.
Kudos to you on that. But yeah, that's not an easy feat. Do you know if there's a lot of competition on this one?
So there were multiple offers. I think there was 5 or 6 other offers. But ultimately we won.
Yeah. Awesome.
Yes.
We won't give away
that happens, especially the first time.
Yeah, we won't give away the secret sauce of your contract writing, but I think that's incredible that you guys were able to accomplish that. So congrats to you and the clients on that.
Thank you.
So tell me a little bit about the property itself.
So this is a townhome property, 3-bed, 2-bath. Pretty simple and straightforward. It was in a super cute little neighborhood that backed to a golf course, centrally located here in Colorado Springs. And it was listed at $230,000. So really good price point for this client. This is really exactly what he was looking for. So we went in at $250,000.
Awesome. Yeah, I think, nowadays finding anything in the twos is quite difficult, and there's a lot of competition at that price point. So
yes.
Yeah, it's you definitely have to have all your ducks in a row to win these offers. So
we knew it was going to be a competitive one. So
so you went all
strong.
In. Very good. Awesome. So we will go through the spreadsheet. So townhouse in Central Colorado Springs. Purchase price you said was $250,000. And then what were the acquisition costs?
They were about $5,000.
Okay.
And he put 20% down conventional on this one.
Perfect. Do you know what his rate was?
Yeah, it was 3.75.
Perfect. Okay. Any seller credits or initial repair costs?
Yes. So we had a seller credit of $1,000. So we were actually able to negotiate for the foundation needed encapsulated. So the cost of that was about $3,200. The seller was willing to give us $1,000 for that.
Okay.
So I have the initial repair costs at about $2,500.
Okay. So you're just taking the net of that.
What was that?
Are you just taking the net of the actual cost and then the seller credit for?
Yes. Perfect. Yeah, exactly.
Okay. Great. And then what is the client thinking he's going to get for rent?
So we were thinking $1,650.
Okay.
He might push it a little bit, but I feel like that's a safe number.
I agree. I remember when he was under contract, I sent you a Hot Pads link of one that was pretty similar that I think was it 1750 or something?
I think it was.
Yeah. So, I mean, I would not be surprised if he could get, above that number, but like we like to do, we always run our rents conservatively. So I think 1650 is a good conservative number for this property. So great. So we have our standard vacancy rate, 3%, annual rent increase, 3%, annual appreciation rate of 5%. So we'll go down. Do you pay for property management? So is he going to self-manage this one?
He is. He's
Okay.
going to self-manage. Um, so he'll be learning a lot.
Yeah, for sure. Yeah, that's a big task to undertake on your first rental property. So, yeah, maybe he'll be able to give us some lessons learned on that when he after he gets some experience for that.
Yes. Yeah, we'll have to do an update
Yeah.
for
Um
sure.
and then monthly reserves and maintenance. What's he putting in for that?
So we wrote this at 5%.
Mhm.
The property is in pretty good shape. No issues. The only inspection issue was the one that we addressed. So 5% we thought was pretty good for that.
Okay. And this is owned, well, the exterior is maintained by an HOA, right?
It
So,
is,
yeah,
yes. And the
roof and siding.
HOA is 251 a month.
Okay.
And the property is just really well maintained. It's super cute.
That's great. All right. So, annual property taxes.
831 on this one.
Okay. And do you know what his insurance is?
340.
Okay. That's really cheap.
I know. That's
Yeah.
what I thought too.
So and then he's not paying for any of the tenant's utilities, correct? And
Nope, he
then
is not.
HOA is taking care of snow and lawn
Mm-hmm.
and all that good
And
stuff.
trash, yeah.
Great. Okay, so drum roll. All right. So if we go down our, kind of breakdown of costs and everything, this investor, he has a total cash investment of about 59,000 all in to include his down payment, closing costs, and his initial repair costs for the foundation repair. So 59,000. And then if we go down to the annual cash flow, we're looking at, net revenue of 19,206 a year down to net operating income 14,033 minus his mortgage payments of 11,115, and he's looking at an annual cash flow before taxes of just shy of $3,000 a year, which is pretty darn good in this environment. So
Yes, I agree. I was really
yeah,
happy about this. Yeah.
because I know he was looking, I think he said he wanted $200 a month, right? That was his goal? So
Mm-hmm.
I think he'll be able to attain that. And then cash on cash rate of return, we're at 4.9%, which is really good. Cap rate, we're at 5.6%. So, obviously he's, kind of helping himself with these numbers by self managing, but yeah, I think it's a good experience for those that are so inclined to decide to self-manage. As you know, I self-manage my properties to kind of save some money as well. So I think it's a good learning experience for investors that wish to do that.
I do too. And I think this is a great property to start,
Hmm.
self-managing. It seems pretty straightforward and so I'm curious, how he thinks it is self-managing. We'll find out.
Yeah, yeah, it should be good. So just kind of popping down to the first year return on investment quadrant. Um, Grand total 36.5% on his initial $59,000 investment. So that's incredible. Especially for a, non-house hacker or, just a
Mm-hmm.
traditional 20% down buy and hold investment. That's fantastic.
Yes, I agree.
Yeah. So any parting words on this particular property that you think the audience should know about?
I think this one just really highlights the benefit of self-managing.
Hmm.
Um, but I think that that's a great option. He's not too far. He's out of Denver, so I think it's something that he's able to do. So I'm just excited to see how he does on his first property. So
Yeah, that's great. Well, congratulations to you and your clients for being able to to land this one. I know that was no easy feat to beat out a lot of offers at this price point, and then also, to get someone under contract on their very first property. That's super impressive. So congratulations to all you guys on that.
Thanks.
So yeah, thanks everyone for listening to this episode for this deal analysis. But if you have any questions, just give me an email, jenny@envisionrea.com, and we're more than happy to help you house hunt for a similar one that Leah just closed on, like this property. All right, thanks everyone.
Thank you.